Morning, afternoon, evening, guys. I hope you guys are having a great weekend. So let's do the lesson for the swing pattern. So this lesson refers to both the swing high and swing low. So when you have a swing high like this and also a swing low, what's really happening on the daily is that the first candle, the first day will create a high. They're creating liquidity. Then the second day is going to take out that liquidity, okay, of the first day. And then once they've taken out the buy side liquidity, then now the third day will close below. Now it's a clear swing pattern. That's the sort of like the summary, right? What's happening? Even if it's a swing low, the first candle, the first day will create a low. The second day will take out what the previous day's low. Then now once they're done taking out the sell side liquidity, the third day will now price will go up. And now price is now bullish, and they'll be targeting what the buy side liquidity. Even here, anyone who bought here to take out the buy side here, right, will be taken out by the third candle. Now, when you have this clear swing pattern, for swing patterns, right, for clear swing patterns and key level that you can use to do a swing trade, you are going to be selling on on the fourth or fifth day. On which key levels? On these key levels. So what you're going to do, right, is on that three candle pattern, you're going to mark the open, the close, the low, the high, and also the equilibrium of the order block. So you're marking the open, the close, the high, the low, and the equilibrium of the order block, right? Especially if you have an order block. These are the key levels that you're going to mark on these three candles. Now I'm not going to mark all of them because the chart will be a mess. But for here, I mark the high. This is the equilibrium here of the order block. This is the close of this candle, middle candle, and the low of the middle candle. It's on the same level as the order block. This is the high of the third candle, the low of the third candle. These will be your key levels, which you are going to use to sell on the fourth or fifth day. Also, when you go to 1 hour, I want you to mark the order block that was used to check out this day's high. Same as the downtrend. 1, 2, 3. The order block here, right, on the second day, which was used to take out this first day's low, you want to mark it also. But I cannot mark it here since this will be the daily candle. So let's go to the charts. Right, our first example is this one. 1, 2, 3. The third candle closes below. So right, you mark the low. This is the order block. You also mark these are the two order blocks that we have. You mark the low of this candle, the low of this candle, the close of this candle, the low of this candle. It's almost on the same level though. I don't really need to mark the highs because sometimes they won't go to the high, but sometimes you also need to mark the highs. Even here, right? This will be the key levels. Right, now once you're done, right, like I said, these key levels are the ones you're going to use to sell on the third or fourth day. Okay, sometimes even the fifth day, right? 1, 2, 3, the fourth or fifth day, or sometimes sixth day, depending on what the market wants to do. Now let's go to 1 hour. We need to mark the breaker block also. These are the key levels. The breaker that took out, so this is the 1, 2, 3. The breaker that took out this high here is what? Is this one here, which is also on the same level as this. So these are the key levels that we're going to use, okay, on the third or fourth day, which is this one and this one. So let's see which was the key, which one was used. If you can look on the third or fourth day, they used this one here, or this one. The first candle low, which is the order block, was used right here. And now this is where you do your confluence. Now you start putting order blocks. You look at your market structure, order blocks, breakers, mitigation block. Here we have this order block. We also have this mitigation block here. So this was a very good level. This was engineered liquidity, just above the order block. Then they came and then you sell here. Let's go to the next one. Here, 1, 2, 3. Once this is complete, you mark. Come on. Right. So you mark, like I said, even if you sometimes if you're an order block, but this was not the order block yet, so I don't really want to mark it. because it's not an order block yet. So 1, 2, 3, you mark the close, mark the high of this one, the close of this one, also this one, okay? Like I said, if I mark all of them, this is going to be a mess, but anyway, let me just mark all of them. Okay, also this one. Right, so 1, 2, 3. Then you go to 1 hour, you want the breaker block that took out the first day's low. Our breaker block, where is it? It's this one here. So that's the other key level. Right, so we have 1, 2, 3. Now, on the 4th day, I'm looking to sell on these key levels here. Like I said, combine these key levels with your order block, with your market structure, order blocks, breakers, mitigation blocks, fair value gaps. Now, here on these 2 days, let's see. The 3rd day, which one did we use this key level here? This one, the one here. That was the key that we used. Then also we used this one here, the first candle high. It was used here, as you can see, right here. What other conflicts did we have? This order block. When prices came to the order block, they came to the order block and also what? This key level. You could have bought here on the lower time frame. You know how to buy on the lower time frame. I don't need to go there anymore, right? And then again, even on the 4th day, there was also a buy. Where? On this level here, this one, right here. This is the level. And also, what did we have on the lower time frame? This order block and this mitigation block. Right, okay, let's go to the next one. We're going to this one here. 1, 2, 3, complete. Again, you mark this close here, the equilibrium of the order block. If you have an order block and it's valid, the high of this one, the high of this candle, you've marked everything. Then now you need to go to 1 hour and mark the breaker block that took out the first day's low. This is the first day's low, this one here, right? We use the order block that took it out. It was this one here, right here. This is the breaker block. This is also the key level that you're going to mark. So these are the key levels that we have. 1, 2, 3. Now, on the 3rd day, they used the breaker. The breaker was already used up, okay? But like I said, now we want to look for a swing setup on the 3rd or 4th day. 1, 2, 3. On the 4th day, we did not have a buy setup, but on the 5th, we have this one here. This was the key level. This one though. So you can calibrate it. Okay, so let me check which one was it exactly. The second candle was actually this one here. Oh, no. The second candle here was the equilibrium of the order block. So let's see if I marked it correct. So it's supposed to be just above, it's a little bit. All right. So now these are the key level that you're going to use to buy. You're going to use that key level to buy. I swing for a swing setup. Look here, right there, and this is your order block. Also, we have this order block here. This order block. If I go to the lower time frame, what else do I have? There's probably something else there. Okay, same order block here. There was a stop hunt BMS, and then there's also an LP here. This stop hunt here. This one, stop hunt BMS, then they came back. This was the buy setup. You would have bought here. Right here. Look at the reaction right there. That's the key level. Let's go to the next one. This one is a bit tricky though, because this one was a long. The swing pattern was very big. 1, 2, 3. The middle candle was so big, even the last candle also. But it was like a doji, I think. But let's just mark and see, because we also have this fair value gap. Right? 1, 2, 3. You mark the high of this candle, you mark the close, this one, you mark the high, everything you marked. Right. Let's go to 1 hour. I'm now here. Let me change the color so that I won't make a mistake. Yeah, that's the one. Right. So like I said, you also want to mark the breaker block that was used to take out the first day's low. The breaker is this one. All right. 1, 2, 3. Now on the 4th and 5th day, look on the 5th day, this is the key level that was used. The first day is high. And the equilibrium of this breaker or of this fair value gap right there. Look at the reaction. In and out. The next example, it's not every single high swing that's gonna work like this, guys. Just all right. 1, 2, 3. Let's mark this low. Right. And then this is the close. And this is the low. And then this is also the high, the low of those candles. So we're here. Let's look at this one. It's not every swing pattern that's gonna work like this. All right, so for this one, the breaker was this one. This is the breaker block that was used to take out this high. 1, 2, 3. Then on the 4th or 5th day, there was no nice clear level here. What they were using this area here. There's a hidden order block here, right here. So they were using this level here. There wasn't really, this level didn't work. Let's look for another one. This one. 1, 2, 3, kind of, now is complete. You mark the levels of all the levels. Then now let's go to 1 hour. We mark the breaker block. Where are you? Here. Which was the breaker that was used to take out the previous day's low. It was this one here, this big guy here. Okay, 1, 2, and look at it. So it was used on the third day. So one thing I've also noticed about this is that sometimes the breaker that was used to take out the first day's low, first day's high, will be used on the 3rd day. This 3rd day here, they will use the breaker. Sometimes they will use the breaker. Even here, you see how they react on the break on the 3rd day. Okay, 1, 2, 3. Again, 3rd day reacting on the breaker. 1, 2, 3. Here they didn't react. 1, 2, 3. Again, on the 3rd day, reaction on the breaker block. There, right there. So some that you can also include. All right. 3rd day, right? And then these are the key levels. Now, 1, 2, 3. On the 4th or 5th day, we want to buy on those key levels. Let's see. On this day, what did we have? We have this order block though. Price came back to the order block, they broke market structure, then they came back, this is the level. That's your key level there. This is in line with this order block. So you could have bought here. If you miss this buy, you buy here. Also on the 5th day, right there, on the beginning of Asia, they use this key level to buy. The last 3 examples, 1, 2, 3. This is now an order block. Like I said, if it's an order block, you mark it also. Mark everything, just like I've been saying. You go to 1 hour. All right. So let's see. 1, 2, 3. Where is the order block that was used to take out the first day's high? It was this one here. This is the breaker block that was used. Okay, so these are the key levels. These are all the key levels. 1, 2, 3. On the 4th day, this was the key. You see how they were reacting on this low here, this key level. Look at the reaction on this day and also on this day. So you could have sold here, right? And then they came back later on and they use this level again here, this one, to sell. So it's not always the third or fourth day. Even so, maybe they can come back on the fifth or sixth day to come back to those levels. You could have sold here. Right, I think we also have a swing pattern here. 1, 2, 3. Which one is that? This one. So let's use this one here. So we have this low. We have this order block close. We have this low of the middle candle. This is the high of the middle candle. And also the high of that, sorry, the close of this candle here. And what else? We want the low of the last candle here. These are almost all the key levels, and this one here. This is the close of the third candle. So 1, 2, 3. All right here. So let's go to the 1 hour and mark the breaker block that was used to take out the first day's high. First day's high was here, which was the breaker. It was this one. Just like I was saying, look, on the third day, they used the breaker block. They used the breaker block. And also there's another breaker here. So 1, 2, 3. On the fourth day, look at the levels here, right here. This is the mitigation block also. Okay, so now that you stack, once you put your key level, then now you can put all the other stuff that I've taught you. Look at the area here. You could have sold here, sell here, sell here. Look at all these 3 levels here. This one, 1, 2, 3. You would have sold on any of these levels. Even the fourth day here, another level, you would have sold there. And even when they came back later on, they were reacting on those key levels. Look at that here. No, not this one. This one here. Depending with your broker and your wicks. And the last 2 examples, this applies to almost all the pairs. 1, 2, 3, you mark the levels. Okay, let me just show you both of them so that I don't have to come back. 1, 2, 3, you mark the levels. Also this one here, 1, 2, 3, you mark. So the first one are marked by blue. This swing high is marked by red. So let's go to 1 hour. All right. So the first, so like I said, the moment you go to 1 hour, first mark the breaker block that was used to take out. So let's see. This is the low. 1, 2, 3. Where's the breaker block here? That was used to take out this low. The breaker is this one. This is your breaker block. This was used to take out this low. This is the first low, second low, third low. Right, 1, 2, 3 candle pattern. If I'm not mistaken. Yeah, it's the middle candle. 21 is the third candle. Yeah, 21 is the third candle. So on the fourth day, all right. So on the fourth day, they came back down here to take out this liquidity, right? So like I said, we want to buy on the 4th or 5th day. So 1, 2, 3. On the 4th day, there was no buy setup, but on the 5th, it was this one here. This is the key level in line with what this order block before BMS, this breaker block here. So the key level. Even look on the 1, 2, 3, 4, 5, 6th day, they were using the breaker block. Look, so you would have bought there. Now, this swing pattern here, 1, 2, 3, you want the breaker block first that took out the high, it was this one. So you can see, like I was saying, the 3rd day, we use the breaker block and then you sell. Now, on the 4th, you're looking for a swing setup on these levels. We have this level and also this level. So you can mark this order block. So this level and the order block, this was the setup. This here was also the setup here. Also here, if you go to the lower time frame, same here. So this is how we can use the swing patterns to do swing setup. But that's only if the market wants to do it, wants to give you a swing, right? A swing trade. Because sometimes you can sell on the third, fourth day, but then nothing happens. They are ranging. So only you can take them, but like I said, the market can do whatever it wants. It can give you a nice swing pattern, then it doesn't come down, and then you control your range. But when they give you a nice swing low or swing high, the fourth or fifth day is a good day to buy and sell. So if you have any questions, just send them to the group, and then just go and back test on all the plays that you're trading. All right. So take care of yourself.